Assalamualaikum and hello everyone. So first of all, we would like to thank our lecturer, Madam Mariana binti Jamaluddin, for giving us the opportunity to make this video. The reason why we make this video is because we want to present our topic, which is topic 6 about account audit and reports. So let me introduce my group members first, which is Nurul Shakira binti Yusof, number matric 0180 19F 1096. Myself, which is Suratul Amira binti Abdul Nasir, number matric 0180 19F 10X6. Nur Alia Akmal binti Anwar, number matric 0180 19F 1064. Next is Izzah Munirah binti Kamali, number matric 0180 19F 1091. And lastly is Alia Batrisha binti Muhammad Adnan, number matric 0180 19F 1114. So we are from group 7 and we would like to present our topic today. So now I will explain about what is the content that we will be present in our video today. So the first one, we will present about the introductions of this topic. The second one is about the procedure of appointment, right and responsibility. The third one is about qualifications. The fourth one is about the powers and duty. The fifth is about the right and privilege. The sixth is about the removal from AGM and also the auditor right during the process. Seven is about the resignations, and lastly is about the company financial statement. So now I will explain about the introductions. A company incorporated under Company Act 2016 is required to prepare a financial statement before annual general meeting. Financial statement replaces the term profit and loss and balance sheet to statement of financial position and company income statement. So next I will explain about a procedure for appointment, right and responsibility. For a primary purpose, the audit is used to express an opinion whether the financial statement is prepared accordance with the identified reporting framework. An audit cannot guarantee that the financial statement is free from material misstatement, but it can provide a higher level of assurance about its accountability. So next, 2.1, I will explain about the functions. So the function of the audit is to report to a member of a company on the various matters related to financial statement, and also to report to the ROC, which is the registrar of the company, on any breaches on Company Act 2016. So now I will explain about the characteristic. There are two types, which is internal audit and external audit. As for the internal audit, it is also divided into two, which is audit committee and internal audit. So it is also consists of internal control mechanism set up by the company. As for the external audit, the auditor is appointed by the company shareholders and has an objective of audit. Meanwhile, he is also not an officer of the company and have an extensive duty and obligations. So next, I will explain about 2.2, appointment of an auditor. So there are two methods to appoint an auditor, which is qualified as required by Section 264 Company Act 2016, and the auditor is appointed by the directors, the member, or the ROC, which is the registrar, as we know is SSM. So next is about 2.3, method of appointment. So there are two types of company, which is private company and public company. So they have a different method of appointment. So for the private company, according to Section 267 subsection 1, the auditor should be appointed every financial year. According to Section 267 subsection 3, it has to fill a vacancy by the BOD, and according to Section 269 subsection 1, the ceases to hold office 30 days after circulation unless it is reappointed. So it is different for a public company. For a public company, we can see according to Section 271 subsection 2 subsection A, it is prior to the first AGM, which is annual general meeting, by the board of director. And if the board of director is failed to appoint the auditor, then the members will appoint a new auditor. And If both of them is failed, then the registrar will appoint an auditor. So that's all from me. Thank you, and my group members will continue our presentations.
Thank you, Amira. Now, I'm Alia Akmal will continue with the qualification of an auditor. An auditor is a person or firm appointed by a company to execute an audit, and he or she should be approved by the Minister of Finance. Firstly, an auditor needs to meet criteria relating to professional training, expertise, and experience. Other than that, he or she is capable of performing the duties of an auditor and has good character. Secondly, an auditor must be registered with MIA, which is a Malaysian Institute of Accountants, according to Accountants Act 1967. Thirdly, an auditor should be independent of the company, which is free from outside control or not subject to another authority. Lastly, an auditor should not owe more than 25,000 ringgit from company or related company. Next is powers and duties of an auditor. The scope of powers and duties of an auditor is stated under Section 266 of the Companies Act 2016. It is categorized into two, which is a duty to members or shareholders and auditor powers and duties under the common law. According to Section 266, Subsection 2, Subsection 3, to examine and form an opinion as to whether the financial statement have been drawn up in accordance with MFRS and the Companies Act 2016, and also the financial statement give true and fair view of the financial position. Auditors need to obtain reasonable assurance that the financial statement free from material misstatement. Next is auditor powers and duties under the common law. It is categorized into five. Firstly, duty to shareholder, which auditors are agents of shareholders and are to be appointed by shareholders and report to them directly, not through the directors. Secondly, duties to the company, which an auditor to treat companies' information as confidential. Duty of care and skill, an auditor not to use companies' information to gain advantage or benefit of himself or herself. For example, using companies' confidential information to make profit. Next one is duty to third parties. The auditor may be liable to the third parties for their losses as a result of negligent audit done by the auditors. Lastly, duty of confidentiality. An auditor may disclose confidential information without the company's consent only. Now, Liza Monera will continue the presentation.
Thank you, Alia, for your explanation. And now, I'm Isa Munira. I will continue to the next rights and privileges of an auditor. Based on Section 266, Subsection 7, states that to attend any general meeting and be heard on any matters concerning the auditors. Next, Section 266, Subsection 8, to report to the directors any breach or observance in the financial statements. Then, Section 266, Subsection 9, to report to the registrar if there is a serious offence. Lastly, Section 286, Subsection 3, auditors are not liable for defamation or being sued in any court if the report was done in good faith. Next, removal of an auditor from annual general meeting and the auditor regs during the process. Based on Section 276 of Companies Act 2016 states that an auditor can be removed from office by members at any time by passing an ordinary resolution at the annual general meeting. Besides Section 322, a special notice of the resolution should be given at least 28 days before the scheduled members' meeting. Lastly, based on Section 277 states that may make a written representation within 7 days. Next, may request a copy of the representation to be circulated. Then, may be removed at general meeting by a resolution passed by a majority votes more than 50%. Furthermore, the auditors cannot be removed by the directors, and the company is required to give a notice in writing of the removal to the registrar within 14 days. And that's all for me. Next, my friend Shakira will continue our presentation.
Now I will continue the presentation. I will explain about resignation of an auditor. If an auditor wishes to resign from his appointment as the company auditor, there are procedures that need to be followed. Okay. First, according to Section 281, subsection 1 of Companies Act 2016, an auditor may resign from his office by giving a written notice to the company. Next, Section 281, subsection 2 state that the auditor's term of office shall come to an end after 21 days from which the notice given or from the date as may be specified in the notice. Third, the company shall send a copy of the notice to the registrar within 7 days from the receiving of the notice of resignation based on Section 282 subsection 1. Lastly, for public companies, the auditor has the right to send a statement concerning his or her resignation with an application notice for the directors to convene a general meeting to receive and consider his or her explanation of circumstances related to his or her resignation. The meeting should be held within 28 days from the date of the receipt of the requisition, based on Section 283, subsection 5. Okay. So now we will proceed with company financial statement. As specified by the Act under Section 248, the director are required to prepare financial statement, were previously known as profit and loss and balance sheet and report. Next, Section 249, subsection 1 provide that the annual financial statement should be give a true and fair view of the following. First, the company financial position of the financial year end, and the second one is the company financial performance for the financial year. Furthermore, Section 252 require a director to prepare director's report to be submitted together with the account. The director's report should contain the following. First, name of every director of the company. Second, the company principal activities including subsidiaries activities. Third, matters provided in fifth schedules of the Act. As you can see, this is the summary of circulation and lodgement of a company's financial statement. For circulation of financial statement, Section 258 for private companies within 6 months from its financial year end, and for public companies at least 21 days before the date of its annual general meeting. For lodgement of financial statement with registration of companies, Section 259 for private companies within 30 days from the date of circulation to its member. For public companies within 30 days from its annual general meeting. So that's all from me. The next slide we will continue by Alia Batrisha.
Hi, I'm Alia and I will continue with 8.1. Alright, so for account to be kept. Okay, so who will be responsible to keep the accounts and other records? The first one is company, the directors and the managers. Okay, it is because of to explain the transaction and the financial position of the company, and to know the true profit or loss of the company, and also to enable the accounting and records to be properly audited. Right, so for section 245 subsection 3, it required that the company have to retain the records for 7 years after the completion of transaction or any related operation for audit purpose, which means that the company have to keep the records for 7 years after any transaction yang dibuat atau operasi yang berkaitan bagi tujuan audit. Alright, and then in section 245 subsection 2, a company, the directors and the managers shall cause appropriate entries to be made in the accounting and other records within 60 days of the completion of the transaction, which means that the company, managers and directors kena buat catatan yang sesuai dalam perakaunan tersebut dalam masa 60 hari setelah selesai semua transaction yang ada. Alright, so 8.2, consolidated accounts, which is account gabungan. Alright, it's a group of financial statement in which asset, expenses, liability, equity, revenue of a holding company, which is syarikat induk, and its subsidiaries, which mean anak-anak syarikat, are presented as a single economic entity. Alright, in section 250, it states that the consolidated financial statement for a financial year shall include all the subsidiaries of a company, which mean that penyata kawangan akaun gabungan tersebut hendaklah merangkumi semua anak-anak syarikat dia. Alright, untuk penyata kawangan bagi tahun tu lah. So for 8.3, which is annual return, okay, based on section 68 in Companies Act 2016, it states that the duty of the company to lodge its annual return to the registrar not later than 30 days from the anniversary of its incorporation, which means that section 68 state that syarikat kena kemukakan the annual return, which is pulangan tahunan, selewat-lewatnya 30 hari daripada tarikh ulang tahun penubuhan syarikat tersebut. Alright, so the annual return should contain, the first one is address of registered office, nature of business, branch office address if any, address of registered members, and also address of financial records and share capitals, okay, if any. And then in section 549, it states that the registrar have the rights to strike off the company if the company fails to lodge the annual return for 3 or more consecutive year, okay, which means that the registrar pendaftar, okay, boleh strike off or remove the company if the company gagal untuk buat annual return, okay, selama 3 atau lebih tahun berturut-turut. Alright, so dia boleh remove the company lah kalau dia fail untuk buat annual return, to lodge the annual return. Alright, so that's all from group 7 for chapter 6, account audit and reports. We are really sorry if ada any mistake, and yeah, that's all from all of us. Thank you very much.